And welcome out to the Halftime Report. It is the 1st of November. We made it, guys. Halloween. We survived. All Hallows Day, or All Saints Day. This is the historical day that I looked this up. This day in history, the 16th chapel was revealed after 15 years of work, which is pretty impressive. I think so.
Pretty impressive. I've been to the Sistine Chapel. It's pretty impressive.
I've never been. It is on my bucket list, but I've never been. Is it?
Yeah,
is it
the first 15 are okay, but the 16th, it's the best.
Oh.
It's true.
Oh, dad joke. There it is. Well, anyways, welcome out, guys. Today's markets definitely popped up, making new highs. The main headline being the S&P, the NASDAQ pushing new highs again. Jobs report came out better than expected. A lot of good news to end the week. This is a legitimate breakout we're seeing now with the Fed lowering interest rates and the jobs report looking really well. How are you guys interpreting this market? Are you looking to play this come Monday for some of those bullish trades? Are you looking to shift your bias more? Because this is a pretty clean breakout.
Yeah, I watched it pretty closely. I thought the breakout was pretty clean. The retest has been very technical, punctuated with a little bit of data from the jobs report. And I was wondering if we were going to see a bit more of a sell-off as some of the, 60% of the trade deal being done news started coming out. But I watched that intraday and I just watched it retest and kind of head back up, and I thought it was pretty clean. So retested that, triple test, and then traded up overnight. And then I think this is a pretty clean breakout. And I think you can actually shift your bias relatively bullish on this with, I think a reasonable amount of confidence.
Absolutely. And I think you can, if you turn to a weekly chart, Noah, I think you can use this week's candle as a confirmation on the weekly. So I do believe it's giving you even more confirmation from where we were kind of knocking on the door, all week long, really, and late last week. I would call that a confirmation close.
Yeah, absolutely. And I think that's, a very clear sign on a weekly chart. It's a very pretty pattern. Nice clean breakout. You got the consolidation, kind of a ascending triangle type setup or a cup and handle type setup there. That's a pretty clean break, strong close, and an uptick in volume. Mm-hmm. So I think that the participation here is, pretty reasonable. I like the uptick in volume on that. It's not crazy high, but it's certainly higher than it has been.
Exactly.
So
and
Noah, would you call that a cup and handle breakout on the weekly?
I think so. It's you could argue over the pattern because it's got almost ascending triangle, but I think it's cup and handle, but more by definition. Either way, it consolidated, tested resistance, and broke pretty clean.
Well, and technically speaking, I mean, breakout on a cup and handle, that's the beginning of a new trend. We should see a new leg up.
Yeah, so that's why I'm saying I think you can trade this with some reasonable confidence because that's about as clean a technical pattern as you get.
Well, and Cody mentioned it earlier today, but it's on the backs of, we can debate the power of economics, but it is on the backs of the last 24 hours. China's manufacturing PMI number came in at 51.7, which was the best in 2 years. And that really helped on the overnight action. The Shanghai indexes, the Hong Kong indexes, the Nikkei kind of bled into Europe, all up about 1% on that news. And that's on the backs of a year straight of just terrible PMI numbers coming out of China. And that's just one area of China, but still, that's positive news. You then had the unemployment rate, and Cody mentioned it again. Expectation was 90K new jobs. We came in at 128, but that didn't tell the story to me. August, September, all got revised upwards big time in the jobs numbers. The labor market in terms of hourly earnings came in at 0.2% increase. So, we should, and one of the things that we have been seeing that holds up this economy right now is consumer spending. So those job numbers really kind of helped there. And then the ISM manufacturing report that came out later on in the morning here today, the number is not good, right? The number's not good. It came in at 48.3 versus the expectation of 49. But coming out of the Chicago PMI numbers, we saw, what was that on Wednesday or Thursday of this week? Coming out of the Chicago PMI numbers, that was expected, to kind of bleed into the ISM manufacturing. The previous was 47.8. So the market kind of took it as a breath of fresh air for a little bit from an economic barrage we saw this week.
Yeah, I think the numbers are pretty solid, as far as that goes. As far as I believe the numbers, So that,
we can debate that.
The Perma-Bear side of me
Yeah.
is always a little skeptical still.
Yeah, we could
especially when I see
debate
numbers
that.
out of China. Yeah. But no, I
Yeah.
think it's still, I think it lends to that bias, I think, of bullishness, confidence. I think it's going to be a decent fourth quarter. I'm seeing all this, the classic seasonal stuff, that I expect. The
Santa Claus looks like he's coming.
Right.
Looks like he wants to.
It's going to be the best Christmas ever. Best Christmas ever.
Well, I mean, he didn't show up last year. As a matter of fact, I was a little worried.
Oh
for his
no, he
safety
got
last
shot.
year.
He got shot down by Kim Jong Un the third. Are you kidding me? He was going over the
last
North
year I was
Pole,
like,
and
what is going
Patty
on?
Kim took a shot. How are you guys going to rank this coming into the Scout Report meeting later on today? It's obviously got to be some degree of bullish. I mean, you could make a strong case to be positive to bullish on a breakout like this with increasing support levels on that weekly. How are you going to go about the rankings? I'm going to start from the top down. Let's go with Frank.
Ooh, well, you guys know me. I'm not particularly aggressive. I will upgrade it. I believe I was 35 last week, which is pretty.
A 35 ranking for Frank is like a 15 ranking for Noah.
I don't go into the 20s very often, and even then, I sometimes do could appear.
When was the last time you went into the 20s?
I've been doing hit some medals a few times. It's rare. It's very, very rare. So I'll probably be going up to 30, which to me probably is like 15 for Noah. I don't see how you can't. I think you have to upgrade. I mean, I guess you could argue
absolutely 100%.
But the confirmation of the breakout and it's not just the S&P. I mean, you are seeing, I was kind of going through my routine this morning and I didn't make it through every sector yet, but I mean, there's a ton of great looking, breakout candidates in the financials, in the banks, in the industrials. Healthcare is a little trickier because it's just went crazy, so it's a little extended. Wouldn't mind a little breather there. Maybe we don't get it. So a lot of great strength in healthcare. You're seeing some good move in the semis. It's just hard not to upgrade it. How far? Me, I'm a wimp, so I'll go 5 because that's how I do it. But upgrade is, I think, the name of the game.
That's what I love though in the Scout Report meeting and how we handle all those rankings is, we all kind of see the market in similar but different ways, right? But we all trade same system, same rules. But some of us are aggressive and some of us are more conservative, and I love it when we have those debates, right? To really have a good conversation about what we're all seeing in the market. Noah, how are you going to go about ranking the S&P 500 today?
I'm going to put it all the way in the end zone.
Is it going to? Is it going? I knew.
It's going. We're going to score. I actually kind of with Frank. I think last week I already had it ranked a little higher. I was expecting the breakout. I don't mind pushing this up towards 30 to, as far as we use the yard line marker, +2. I think +2.
I don't think there's going to be that much difference in how we go about ranking the S&P, but I do think there's going to be some differences in sectors. You're seeing some sectors set up really, really well, and you're seeing other sectors underperform some of the broad markets. You take a look at XLI really quick on the daily chart, for example.
Oh yeah, you bet. You want that high. That's a weekly. So you got put that week,
but that weekly break is significant too.
Oh yeah.
And I mean, if you're talking about that weekly break, that's 2 years of consolidation in a sector that has been tied to the Chinese-U.S. trade war tremendously. But I love it on the daily chart here, though.
Oh yeah, well, and as far as the sector goes, this is one of the leading sectors, for seasonal expectations. So normally industrials and basic materials are your 2 top sectors, with technologies, being the third. They tend to do really well. So I kind of like this setup. It's definitely got the breakout, just a little bit of noise around this $80 level.
I like it above 80. I do. I like it above 80. I know that 80.96 tick back 2 years ago. I don't care about that tick. I like the sector. I think it's breaking out of 6 months, 7 months of consolidation here. Take healthcare, for example. I agree with Frank. Healthcare has exploded over the course of the last week or two, really showing positive relative strength against the market here. But it's so far overextended, probably a little wait and see. And so I do think you're going to have some significant differences within the sector rankings. Some sectors underperforming, some sectors outperforming. And you know what, guys, that feels like a normal market.
feels a lot more normal. I like it when we get a little directional. I think it's easier to trade when you have a directional market. And I think that's what we're setting up for. We might see a return to volatility, but I actually think we may see some trending markets for the next couple of weeks to months. Probably
I agree with that.
At least till December.
Mid-December.
Mid-December, especially as when your Black Friday retail numbers come out. That's always something the market looks forward to. They love the Black Friday numbers.
I mean, I don't have any hesitation saying that the consumer's going to spend a lot of money on Christmas this year. They've been spending money all year long.
That's the plan, right?
Yeah. Well, that's the hope for us investor class, is that the consumer class keeps spending their money so that the revenues of Apple and Disney and Microsoft and all these companies that we love talking about, love investing, love trading, have a tendency to do better in that environment.
That's for sure. So pretty solid move there.
Well, I'm going to quickly chime in and say, I think I might be a little bit more aggressive. I know the caution.
You're young and hungry.
But here's my reason why. Because I follow Forex so closely, with the non-QE, with the rate cuts that we've seen, with the stimulus that's being put into the market, I don't see any reason to actually shy away from this, because I do see this. It has the technical breakout and the fundamentals behind it to continue to push it forward. The only thing that could really bring this thing down is, I don't know,
China not signing a phase 1 deal.
Exactly. If we don't sign the deal with China, and that becomes a top headline. But then you know what's going to happen 1 month after that, or 1 week after that, or 1 day after that, we're going to get a headline that says China agreed to new talks and it's going to go back up.
I'm just saying, you said you don't see a reason. I'm just saying there's a couple reasons out there.
I see more reasons pushing this thing up further than I do pulling it down at the moment. Don't get me wrong.
I see seasonality and technical analysis here. The market is not backed by fundamentals at this point. I mean, valuations have been just thrown out the window in this late stage bull market. But technically, I just go back to every time we see a breakout here, and I'm talking to Keith King, and I spent some time with Keith King over the weekend in New York City, and we're talking about this potential breakout of the S&P 500, and I'm doing my whole fundamental analysis, value investing, economic analysis, and having a lively conversation over a couple beers with Keith King, and I said, Keith, are you going to buy the breakout here? He says, I am. I'm gonna hold my nose and buy. Okay. And so, and
that's a
whenever
good way of putting it.
And so fundamentally and economically, we can get so caught up in, well, what about this? And what about the growth? And what about the valuation and whatnot? But at the end of the day, as a trader, the most important form of analysis is technical analysis. And you have to call this a breakout.
An easy way to look at it is, if you're breaking resistance, it's always a technically speaking bullish signal. Whether you trust it or not, that's a debate, but who am I, right? So I just always trust it.
Who am I to call when the bubble's going to pop?
We've also said time and time again, 30-30 was the number to look for, and 30-30 quickly became the new support.
Well, it got tested yesterday, snapback test yesterday. And that's a great point. No, come back to here in a minute, because I love what you're doing here from the valuation perspective, but show our community here what Cody is talking about when he talks about, okay, it broke out, 2 days ago, retested yesterday on the intraday, held that breakout channel. We've talked about 30-30 being an important number on the S&P 500 many times. Let's see this on the 15-minute chart. Walk us through the analysis, Noah.
Well, again, it's, nice little breakout, pop into a new high there. Just technically speaking, it's so pretty. Again, it's not a hard retest off the support resistance zone. It's just up. So I mean, it's got all the technical, the technical entrapments that we want to see. Mm-hmm. So beautiful there. From a fundamental perspective, I started to bring up that Shiller PE ratio.
Yeah, it's gross.
Yeah, well, it's just the Shiller PE ratio is also called a CAPE ratio, a cyclically adjusted price to earnings ratio. And it's only been higher a few times in history. Where it's at right now, 30.21. That's how high it was on Black Tuesday back in 1929, mm-hmm. And we're that high again here today. But the market, I think, the valuations and the chase for return I think, with bonds as cheap as they are, I mean, where else do you go to get returns? Your choices right now are real estate and paper assets, basically, maybe some basic materials in there. But, it's been higher, like the .com bubble. We saw the PE ratio get out of sight. But basically what they're saying is it takes $30 in to get $1 of earnings out is basically what it comes down to. And that's a high number historically speaking, but it's been that way for several, almost 3 years now, where we've seen it up above 30. So it certainly can go higher, if again, price of the assets, you look at a company like Apple that's leading the charge, their PE ratio is still pretty low.
Yeah.
You look at other companies, their price to earnings ratio can be much higher, but historically the mean's around 15, 16. So it's, 2 times, the mean of history, but traders are still buying. So it's not hard to say that assets were overvalued. It's hard to time when they come down.
Do you think, given the changes in the debt cycle, the changes in monetary policy over the course of the last 15 years, really, do you think that's changed the way value investors have saw the PE ratio? I mean, if you're looking at these cycles from the 1980s to today, I mean, the net mean is not 15. That's the net mean if you track it from 1880 till today, right? But if you're tracking that PE ratio and the average PE ratio over the last 30 years, you're talking an average PE ratio that's probably above 20.
Probably. I'd agree with that.
Yeah, we're just seeing changes in the way fundamentals and economics and monetary policy have been handled.
Well, yeah, that, and I think also expectations and attitudes, like belief systems are changing. It's, valuations, like people are adopting the new normal, and it's different than it has been over the past. And again, it is it's a brave new world of modern monetary theory, which
Yes,
I don't possibly see how it could ever come back to bite us in the assets. But
there's that optimist I know and love.
Yeah, there was the sarcasm right there too on that one. I don't think he wanted to go down the road on the rabbit hole there.
But that's exactly why Keith King's right. You just hold your nose and buy, because it's a clear technical signal.
Yeah.
I don't think there's any reasonable fundamental analyst who thinks that this stuff is really healthy or good, but it's become the new normal. So the market's going to press on regardless. And sure, someday there'll be a come up, and that's one of the reasons I'm kind of a perma bear. But I'm still a perma bear who trades bullishly. I hold my nose and
well, I laugh at. I see this on Twitter all the time about the bulls making fun of the bears, and I'm like, guys, we're traders. We're the biggest flip floppers in the world. We'll go from bullish to bearish in like an Allen Iverson crossover. I mean, we're all perma bulls and we're all perma bears. We don't have to pick the team.
Nope.
Exactly.
You see, you can change quickly. That is for sure.
Frank, have you went through any of your process in identifying potential trades today?
I did. I went through about halfway through, a little slower the post Thanksgiving. Yeah, I'm just fast forwarding a month.
You're getting close. You're excited for it.
Yeah. I am excited about it. I got to watch the ball game. I got to watch my one of my favorite players, Manny Sanders, the 49ers, formerly of the Broncos.
Playing good ball.
Playing
good ball.
He's a good guy for sure.
So halfway through your routine, how are you? What's standing out to you? Because I know when I go through my routine, I go through the sectors and the individual stocks within the sectors, and things always kind of stand out. What's standing out to you so far?
Well, so far, I've made it through the basic materials. Not a lot of great trade setups, in my opinion, within that space. A lot of strength, but need development. Although you still have things like Alcoa, AA knocking on the door of a breakout. Energy seeing some signs of reversal now, and you got to like it. And if you look at XLE, we put in, at least as of right now, a third consecutive higher low. So showing some strength. Exxon had good earnings here today.
Let's take a look at Exxon real quick. Exxon did have a good earnings report, popped up. I mean, I'm looking at a company like ExxonMobil, and it's obviously a widely held company, a widely traded company. It's probably the number one company in the energy space. I'm seeing some technical changes with support holding multiple different times here on ExxonMobil. The moving averages are starting to converge against one another. 66.5 held about 12 times over the course of the last couple months. You had a positive earnings report today, and you're knocking on the door of $70. Is this a possible reversal buy for you, Frank?
Absolutely. You break above that resistance, that high from last, I guess would be last week, and we are absolutely talking about, in my opinion, at least a tradable breakout. Now it's ExxonMobil, so it's one of the more stable, but it can still move because it's in energy. If you prefer other things, there are still a fair amount of the E&P type companies reporting next week, earnings wise. But you're seeing great movement. A lot of them are going to kind of be ruined. Like Valero this morning was looking really great. VLO, they've really probably destroyed my risk to reward ratio, but still a lot of strength. And maybe we could talk a break. And so I think much like Noah, I don't really believe in energy, but you go with what you see. And while I'm not there yet, broadly speaking, I think you nailed on the head, Maddie. And it's not just Exxon. We're seeing those type of signals in a lot of things. I mean, Phillips 66 doesn't even care about anything but going up, apparently. So
Conoco, seeing a little bit of the same thing on Conoco. We're seeing it across the board on those energy stocks.
Well, I mean, just look at the XLE, look at the energy sector ETF. It's got very similar pattern. It's held a triple bottom. It's got some higher lows. It's still, I think the context is still overall downtrend of consolidation, but that's a reversal setup right there. You got two higher lows. If it breaks the $60 zone, that's really reversing. I mean, you've already taken out one minor pivot, two minor pivots. So it has established a minor uptrend right here. Higher high, higher low. It's in the context of that bigger downward channel, but that's how it starts. I mean, an upward trend started, right in here with day traders buying off the double bottom. Like it takes time to build into a trend, but it's been going on for quite some time. And if that's going to, reverse and carry through, I think that $60 threshold is a big number because that takes out old support resistance and just gives it a chance to violate that downward channel.
I would agree.
I love Noah's trend line so much.
You had a cool drawing tool for you.
Yeah, I am getting one. You got to come over to my office and get me hooked up with that.
It's so easy.
He just draws whatever he wants. I just love it.
It just makes me feel like John Madden. It's like, bam, right there.
John Madden.
There's the rest of us.
I think there's a fair point. I think there's a fair point on this, that the bottom feeders, like we've seen in the energy stocks over the course of the last really year to date, the bottom feeders in energy, I mean, they can fly if they do reverse and confirm on that reversal. I think it's okay to take a stab there, no doubt about that. But I still think the name of the game is buying into strength right now.
Well, would you rather take the industrials on the breakout or energy on the breakout?
I don't even need to look at the chart.
Right. No, so, this is kind of one of those, Horizon's okay. Or, Exxonmobil's okay.
Yeah. I think you take a stab.
Yeah.
Right. But, I mean, you take a stab on it.
Take the breakout on John Deere on the industrials or, some one of the other big players. Like Caterpillar's breaking out.
Yeah, there's lots that, I'd 100% agree. But interesting, and I do think you have to respect that subtle, shift that Noah pointed out there. So that's, there's some interesting things going on there, but we need a little time. I would agree. If I'm buying in the breakout, it's, it's finance. So there's a lot of breakouts in finance. BK, nice, clean resistance.
Oh, finance is strong right now.
It's fighting Goldman Sachs. So there's a lot of breakout trades. It was more a risk reward as opposed to the potential candidates in finance. I found a million of them. I'm not bringing them all on my watch list though.
What is amazing, you guys, is a lot of these sectors are not breaking out of all-time highs. They're breaking out of some are, but not a lot of them aren't. They're breaking out of consolidation, and they had all-time highs from, say, 2 years ago before we started seeing the sell-off in late 18. And the S&P 500 is still breaking out of all-time highs and showing tremendous strength. You're seeing leadership out of the Apples and the Microsofts and those big dog stocks. Google, take a look at Google. You're seeing some leadership out of Google as well. So, not all the FANGs are coming back, but I do believe some of the FANGs are starting to show leadership again. And when those big dot companies show leadership and show strength, they have the ability to raise the entire marketplace up.
Absolutely.
We saw that for 5 years after Kramer did the time. Yeah, well, after Kramer's best call that he's ever had was the FANG call. I mean, it literally led the entire market, and he needs to get a lot of credit for that. And we are starting to see leadership. So it's going to be interesting to see how those things happen. I do want to take a look at Apple and Microsoft very quickly here, Noah. Apple breaking out, establishing an all-time high on the backs of a positive earnings report yesterday. Also, guess what launched here today, guys? November 1st, Apple TV, and they're looking at projecting 4 or 5 years from now, guys, on Apple TV, about 100 million subscribers. Think about this for a second, guys. They have 580 million active users of iTunes. Apple has that many. And they're looking to project 100 million. That could be undervalued a little bit for Apple. I know Amazon Prime has more than 100 million. Don't know exactly what Netflix is rocking. It's going to be fascinating to see what Apple does here. This to me is a buy. It's showing me strength. It's showing me strength in fundamentals. It's showing me strength in technicals. Love what they're doing here. What do you guys think?
Absolutely. It's just, how do you want to do it?
Yep. How do you want to play it?
How are you building into the trade? Do you want the pullback, like you got, shortly, a very brief opportunity? Well, we're going to have to wait and see. Comfortable with the breakout, scaling in. I mean, Apple's cooking. I'm not getting in the way of that. I promise you that.
No. And it's just amazing to me that we've seen with Apple specifically such massive price appreciation from the low of 142 that it really kind of ticked at the very, very first of the year this year. We're just seeing this massive appreciation in Apple, and yet its PE ratio is still a really solid under 20, got good valuations. You could play Apple in a variety of ways through debit spreads, directional swing trading, position trading at this point, or even from an investor standpoint. I'm not gonna go against one of the best companies in the world. There's no doubt about that. Let's take a look at Microsoft. Frankie, you have something to say on that?
Oh, Microsoft. Yeah, absolutely. I do. It did us a huge favor this week. We had this on the reports. Everybody was looking at Microsoft. It's not, nobody gets a lot of credit, but major resistance level, big earnings beat, and then to open up the week on the market, gap right over it. And I guess depending on how your order was set up, making it a little bit difficult to trade. But a whole week of now going sideways, putting in a little.
I love the consolidation.
Oh, a little ceiling on top of the big
breakout
ceiling.
Frank's getting excited, guys. When breakout Frank gets excited, watch out. He's seeing something in that chart.
Yeah, that is an exciting.
Watch that nine. Watch that nine. Watch the nine kiss. Watch the nine kiss.
We need about, ideally, 3 or 4 more trading days. 9 pops up, pushes us back into that little top that we put up this week, push through that, and then I expect a nice movement on Microsoft. And in my mind, about the only thing that could get in its way, assuming we can break that resistance, because that's an assumption, is probably the market turning. That is such a clean technical break.
The only debate we're going to have here is where we're triggering.
Yep, that'll be the big debate.
That's the only debate, because you got, on that breakout, you had some ticks at the 146 level, but I'm seeing that 145 level as
I'm good with
probably strong number.
Yep,
I like 145 here.
Because the 146
we're not going to debate then.
Yeah, no, I don't need to debate. I'm good with it.
Okay, good. I'm good with that.
I think
it's a pretty enough chart in the general big picture context. I'm not going to worry about that one little
a couple pennies.
Just show me upward movement. I'm good.
I'll probably look at it more like conservatively, take a portion at 145 or the break there, and then build the rest when it actually breaks the high, because the high always, you guys know me, it always sometimes scares me more than others, but I always look at it.
Well, I think you have to look at it because those algorithms are so consistent. And I do think that's a wise thing to look at. And that's something a lot of traders do, guys, is when they're looking to trigger in on an intraday breakout, they might take a position above 145, take another position above 146.50. So they might say their normal position size is $10,000 into a swing trade. Right? They might scale in at 3,000 in one trigger and another $3,000 in another trigger, kind of building into the position as it shows some strength. That's a wonderful point there, Coach Frank. Let's take a look at the Dow. Oh, go ahead.
No,
Frankie.
I was going to say it's really underrated, and I get it. I run into it too. I mean, we so often tend to think in yes or no, right?
Yeah,
but
black and white.
In and out, is such a reasonable thing to do when you say it out loud. So,
well, there's so much black and white to trading, like rules-based trading, right? You when you buy a call option, you buy it closest to 0.60. When you do a debit spread, you buy a delta closest to 0.50, sell one closest to 0.250. There's so many different empirical rules, but there's a lot of gray area as well. There's a lot of subjective type process in trading, and scaling in is absolutely one of those techniques that, traders utilize to trigger in aggressively while maintaining some conservative posture and position sizing.
Well said.
All right, let's take a look at the dollar index. I'm going to bring in Cody. Cody, you're doing the Forex report here today, or not today, but you'll be doing the Forex report this weekend for tackle trading. Cody,
Yep.
we talked about the dollar yesterday. Let's look at the index here, $DXY. Cody, in terms of the index, doing what we thought it was going to do, kind of retesting that support channel. What's your take? It's still in the channel. How are you going to approach ranking the dollar? Let's start with that.
The dollar is definitely going to be on the bearish side, just slightly, probably around the negative 35 yard line, maybe negative 40, depending on how I would plan to put it. Because on that weekly, it still is in that channel, but right now it's also below the 200. So the 200-day moving average is an important one for me. If it were to break that line that Noah's got drawn right now, which is right around 97.10 or
97,
so, then about 97 even, that it'll definitely move quickly. So I have talked a lot about how the support and resistance when it comes to currencies is never an exact number. The whole numbers can stand out, but they're always in a range. So if you notice the sticking point of the range, like even the trend line that is drawn on both sides, there's kind of a range to it where it's more of a gray area for
support and resistance are zones, right? I mean, Noah's drawn a finite line, but that finite line is about 1 ATR total.
This is why I need him to bring up his curvy line, because it would just make more sense.
Here, let me fix that for you. Hold on, let me go get the width on that.
Give me a width of 5.
Now.
There you go, buddy.
Yeah.
I think you need to go to a width of 10, by the way. But
I also just made the support stronger so you can buy with more confidence.
Oh.
Thank you, kind sir.
Appreciate that, Noah. I think there's going to be a debate here, right? Between the short-term price action versus long weekly price action. The question is, which one's going to be more dominant?
Exactly. And I mean, it really needs to get back above 97.50 for me to start arguing more towards that, the weekly is going to hold. So it's actually in this perfect little range right now of who knows.
I'll talk to you about it. I mean, parallel channels don't happen all the time. You can get close, but that's about as parallel of a channel as you can get. I mean, between your relationship between those trend lines on resistance and your trend lines on support. Support is one of the most important concepts in the marketplace. I'd say it's even more important for me than resistance is. I think a breaking of support is more powerful than the breaking of resistance, for example. Gravity's faster. And so when I'm looking at this short-term bearish downtrend, piercing against that moving average, has momentum to the downside. But that weekly channel is so strong. I think we got to stick at -40 to -45 here on that. I don't think we can make it a bearish call yet.
Not quite bearish, just -40, just pressing bearish, neutral leaning.
Well,
bearish.
it's neutral leaning bearish, because if that does break 97, guys, I do believe 96 will be ticked, and that's a significant movement in the dollar. I mean, when we're talking if Apple moves $1, it's like, yeah, so what, right? If any stock moves $1, if United States still moved $1, nobody would even bat an eye. But if the United States dollar moves $1, that's a significant movement. Currencies don't move like that.
If the dollar moves $1.
If the dollar moves $1, that's going to become a thing.
I think we just hit some sort of self-referencing.
Yes. Right, that will become a thing. Let's take a look at
Inception music in the background.
Inception's a great movie. I had to watch it 4 times before I realized how good it was, but it did take me a while.
I do agree Inception was a great movie, but I think might have been greater was South Park's interpretation of Inception.
South Park's interpretation of absolutely everything in life is better than the original production.
There.
Number one. Okay, let's take a quick peek at crude oil. And Noah, give me your take on oil.
I'm pretty neutral on oil. I mean, you're seeing a little bit of higher lows, a little bit of life in here, but I'm still just neutral on my bias. The inventories were high. Seasonalities doesn't in my opinion doesn't favor it. But I wouldn't bet against it. I wouldn't take a directional trade on it. So I think this is great for selling the premium out there, down below sport, low delta.
I mean, how many times have we said that over the course of the last 6 months?
Yeah.
Kind of sounds like we're repeating
selling
ourselves
spreads here.
often. Yeah.
Yep.
Well, there's a lot of redundancy in trading, right?
Well, it shouldn't at some point in time trading be kind of boring. Like
it should always be boring outside of earnings and news-based trades in the currency market. Trading should be boring.
Jimbo, you should quote that. Trading should be boring.
Boring is the new exciting, Jimbo.
It is the new exciting. Let's take a quick peek at gold and silver here.
Oh no, we're going to see more of the same.
Yes, we're going to see more of the same here. Gold has done absolutely. I have gold as a buy above 1,500 here. I think it's cheap risk with stop loss under 1,480 here. Technically speaking, this chart does not look great, right? But the weekly chart still looks amazing on gold. And that's how I think people should approach gold, is analyzing it on the weekly chart with identifying the triggers on entry and stop loss on a daily chart. Noah, is anything other than what we said yesterday on gold?
I just like that bull flag on the weekly chart. I see continuing monetary policy, to the modern monetary, slant where they're just going to keep diluting it and printing it.
Mm-hmm.
So I see, it's a strong case for gold here. I like the technical pattern. From the daily chart, it's been boring, but again, it's the same kind of thing. You can sit and collect premium, or you can own the asset. It's always something you can write covered calls on if you buy the ETF and whatnot. But I like the pattern from the weekly perspective. It's just textbook bull flag.
Yeah, bull flag. Well, bull flag with increasing momentum going into a wave 5 according to Elliott wave. So There's that too, right? Love the momentum we're seeing on that weekly chart on gold. Natural gas next /NG here. Just want to bring it up because it's up about 1.37% here today. We talked about this yesterday, forming a little bit of a high base type situation on that real short-term price action. Still keep an eye on that. Last chart I want to pull up before we go to final thoughts here is Bitcoin. Let's go /BTC on this one. And the reason I want to bring it up.
Did Matt just bring a big Matt? Just brought a big Matt.
Listen, I don't believe in the fundamentals. I'm not a holder. I'm not a crypto craze. I'm not any of that. I am a trader though. And I'm seeing a little bit of a flag here pattern with a breakout potential of 10,000. And I just wanted to pull it up because if it does break out at 10,000, I think most traders would say price appreciation would happen here. What's your technical read on Bitcoin, Noah?
It's a good reversal. 10,000 is a solid number that gives you the higher low. And it's coming off of a lot of energy off of that pop. So that last little pop, boom, big pop, a drift back down, fill in the gap. If it powers back up from here, that can actually lead to quite a bit of price appreciation.
Oh, if it breaks 10,000, I'm going to tell you, I think the target most likely would be 10.8.
Yeah, 10.8,
like 10.8,
maybe 11, somewhere in that ballpark. And if you got really lucky, it's hitting 12.
Yeah, but would anybody be shocked if Bitcoin hit 12? Hit it? Would anybody be shocked if Bitcoin hit 12, came right back down to 10?
No, not at all.
Okay. Yeah, I mean, that's what Bitcoin could do. I just want to point out because I am seeing a breakout potential on Bitcoin. Let's go to final thoughts here. Coach Frank.
We're not out of earnings yet. We've got just shy of 100 S&P companies coming out with earnings. So keep an eye on that. I mean, there's a little bit of time left in the day, so we haven't closed yet, but I'll be keeping a very close eye on the weekly candlestick on today's close. I'm expecting confirmation on the breakout. So I think we're going into next week bullish, responsibly bullish as always, right? Never go too crazy and stick with the rules. There are a lot of interesting candidates out there. It's probably going to be hard to find clean bears in mass this week. And so
we will hunt.
We'll hunt.
We'll hunt.
It won't be as big of a list as the bull list. That is for sure. Lots of strength in some of these big names, and a lot of strength in industrials. Railroads are really strong. Finance. So things are looking. Technically, they look good. You can believe it or not believe it, but I'll believe the chart because it's smarter than me.
I agree 100%. Coach Noah, final thoughts.
My final thoughts. It's November. we can finally put this Halloween nonsense behind us. No, I'm just coming down off of a sugar high. That's all. Trade smart, trade safe. We're going to have an awesome report for you on Monday. So make sure you check out the reports this weekend.
And my final thoughts are this, and then I'll turn it over to Cody to send us out and give us his. There was a very important moment yesterday that was supposed to happen that came and gone, and nobody even knew it did because nobody cares about it any longer. And that is Brexit. Literally October 31st was supposed to be Brexit Day.
Oh, wow.
That Boris Johnson had stated that Brexit was going to happen, and Brexit came and gone, and it wasn't even in the headlines because once again, nobody cares. And that's my final thoughts on Brexit. Cody, send us out.
Wow, that's a very sombering switch over to me. But anyways, guys, if you did enjoy our conversation, though, on a happier note, then just know that we are going to be here every Monday through Friday. As long as it's not a holiday and the markets are open, then we're going to be here, guys, breaking down the markets and helping you guys go through your routine and learn how to trade. So if you really like what all of the coaches of tackle trading are doing on the halftime report, make sure you like, subscribe, and follow our YouTube channel. We put out tons and tons of content in addition to the halftime report. We put out on average about 3 to 5 videos a week, teaching new concepts, new grammar, new strategies that are always on YouTube. So make sure you're subscribing so you get quick access to those. And if you want to learn what these scouting reports are, what the lounge are, what all these things that you're hearing us talk about, what our students are enjoying behind the paywall, then you need to get signed up for a 15-day free trial so you can experience what our students are experiencing. And to do that, click down in the link in the description or email Mark at team@tackletrading.com and he'll get you set up with a 15-day free trial. With that, guys, I'm looking forward to the scouting report meeting and writing the reports this weekend. We are out.